Hello traders, welcome to your daily market update for Thursday the 7th of May. It is election day in the UK and we should see some volatility coming out as a result of that. And we've seen overnight the US dollar really come under pressure on some more disappointing data. So let's get in and have a look at the economic calendar. And as you can see, we have had the employment data coming out from Australia, and you'll note that the Australian dollar bounced on the back of that. And that is because the result was flat after last month's surprising result. So the market has interpreted that as a little bit more of a positive, and they were expecting potentially a much lower figure as a result of last month's surprisingly good result. Usually the month following can actually counteract such a big move in a month. So the result being steady, the market is interpreted as positive, but really the market is also focused still on the confusion that the RBA has put in. And for now, the market is considering the RBA's position as back to a more neutral stance. And that'll be confirmed tomorrow when the RBA monetary policy statement comes out, and we will get far greater explanation as to really what is going on. So last night was all about the US dollar. It is the 24-hour election, and there is some uncertainty in the UK coming in today's session. We are looking at potentially a hung parliament between the Conservative and the Labor Party. And if we do get a hung parliament, that should really affect the pound. In 2010, we had the very similar election situations, and the pound fell considerably against just about all currency pairs in the order of 300 to 400 pips. So if we do get a similar result, the moves could be quite sharp and swift from the market if the election looks like going down that path. We'll keep a note, and you'll have to keep an eye on the news wires to keep up to date with information regarding the parliament. Later on in the session, we do have some European data, but I don't think that's really going to be in focus, and the market's pretty much going to ignore that data for now. And moving into the US session, the US dollar will be once again in focus as we look for initial jobless claims, continuing jobless claims, and we really look to try to get some indication of really what the non-farm payroll is looking for. Right now, the market is worried that the non-farm payroll is going to be a weak number, especially after last night's ADP miss, and it's sending the US dollar sharper and lower because there is concerns that the non-farm payroll will miss, and then we will get the Fed being a bit nervous about raising rates and potentially pushing it back further. So there is some skepticism there. Although we did see yields bounce and we did see stocks fall, which suggests that a rate hike is still in the minds of investors, so not all love is lost. And we will have to see how it proceeds throughout the remainder of the week. The euro data was flat, but the euro's climbed to new highs on the back of soaring bond prices and the sharp falls in the US dollar, of course. So it's going to be interesting. The US dollar is approaching a support level, and the euro is also supporting a resistance level. So wait and see what pans out when we go over to the charts. The Canadian dollar was strong on the back of oil, and the US versus the Canadian dollar fell on the back of US dollar weakness. The New Zealand was hit very hard by the surprising employment data, as I mentioned yesterday, and I think that is going to continue to weigh down on the pair, but for now it has consolidated, and it will be looking for new direction as the market proceeds today and throughout the rest of the week. The Australian dollar is still strong after the rate minutes, but and the employment data that we had just came out is also supplying some sort of support. So for now, the Australian dollar has been fully supported. If we go to the US dollar, you can tell here on the charts that the falls have been quite dramatic. We did fall, we broke through the support level, we've come back up, tested the back of it and fallen away. We are now testing another support level, and a break of this would continue to open up possibilities for lower moves. So for now, the US dollar is really under pressure, and we'll have to wait and see from tonight's data and the non-farm payrolls on Friday exactly how we finish the week. But it definitely looks like we're going to finish in the red. It just depends on if there's any information that's going to come out to stop the bleeding. Let's have a look at the charts, and as you can see here, the New Zealand dollar fell quite heavily, and we're just having a little bit of a bounce now on the back of the Australian data in the Asian session, and I think that we will run into resistance levels, and a break of support down here will continue to expect to see things push lower. The Australian dollar is still supported, and we did run out of momentum at 80 cents. 80 cents, as I mentioned yesterday, is a resistance level. We are having another run back up to that level, and it's going to be interesting to see whether we actually continue this momentum and break through. I think the US dollar will hold the keys to that, and definitely tomorrow's decision from the, or minutes from the RBA will help explain exactly what the position is and what the plan is in the future for the Australian policy. The Great British Pound found support off the 200-day moving average, and it continued to find support. However, we are approaching a resistance level, and we do have the UK election risk. So I am expecting that we will either get a breakout to the high side, or we will get a breakout to the low side. A breakout to the low side will continue to extend losses greater, and that would be a result of the election risk in a hung parliament. If we do get an agreement and a clear result in the election, we could see a relief rally and continue and break through this level and make its way up towards the 200-day moving average, which is the next resistance level. The euro is strong, as I've mentioned, and we did get a very clear bounce here off the 100-day moving average, and we have continued through and broke through, forming ourselves a new high, and we are now approaching the next level of resistance here, and we will see if the euro dollar can break through $1.14.5. For now, the US dollar is definitely under pressure, and it's making it very nice work for these currency pairs to continue in the rally. Bond markets also assisted in the rally here. The US dollar versus the Canadian dollar, we did see falls throughout the session, and I think that the falls were a little bit capped, but we did have oil continuing to rally and then peak out. We do have somewhat of a double bottom, but a break of this level would definitely open up moves to the downside, and let's see whether tonight we do get a stronger report in the US dollar and we can see a bounce. Keep an eye on oil prices and keep an eye on the US dollar. US dollar versus the Japanese yen, we approached the top of the range bound, and we have moved back to the middle of the range. We are still range bound, and I don't see any near-term solution of us breaking out of this until we do get some sort of clear indication of when the Fed will raise rates. But it has been a consolidation since December, and when a consolidation happens for such a long period of time, when we do get a breakout, I expect the trend to last for quite some time. So it's going to be a trade that many people are watching, and we will see the market react accordingly, I'm sure. Well, that's it from me today. Definitely keep an eye on the pound and the election risk, and the US dollar is still remaining in focus. Keep trading off those technicals and with momentum, and I'll be back again tomorrow. So until then, trade well.